Hi everyone, let's go over my medium time frame and micro Elliott Wave scenarios on Bitcoin. Starting with the medium time frame new bullish scenario, where previously we were looking for a 1-2-1-2 for then a bigger 3 to the upside, but because of many reasons I explained in previous videos, it felt like a very alternative scenario, and therefore I now put this leading diagonal scenario on my chart, where we are looking for a bigger wave 1, which then is a leading diagonal, where all of these waves are consisting of a 3-wave structure. So you have two types of leading diagonals. Either all the waves are 3-wave structures or you have a 5-3-5-3-5 wave move. In this scenario, it's then a 3-wave in the one, and therefore automatically you expect all waves to be 3-wave structures, where wave 2 and wave 4 need to be zigzags. So zigzags are 5-3-5 wave structures, and this wave 2 is of course not allowed to take the low of this wave 1. That would be the invalidation of this scenario. And then eventually you get a move to the upside, 3 waves in a wave 3, for then eventually again a zigzag in wave 4, for eventually a 5 to the upside, which ends wave 1, and then eventually you get a corrective 2 to the downside, where again the lows over here is the invalidation. The moment price would fall, take these lows, this scenario goes out of the window. If you then go to the lower time frame scenarios, I want to show you two different impulses and actually also talk to you about the reason why I have two different ones. So the first one over here is one I showed in the previous video, where we are then looking for a wave 1, 2, then a 1, 2, 3, 4, 5 in this wave 3, almost hitting the 1.618 as a common target for wave 3, so that's fine. And then we have an expanding flat in a wave 4 over here. Now an expanding flat in a wave 4 is the most common pattern in a wave 4, so that is quite nice. We also have over here the 382 and the 0.5 Fibonacci taken from the high of 2 to the low of 3, and this is a common target area for a wave 4, so that works as well. And then invalidation of this wave 4 is if price would move to the upside, close candles above the 0.5, that's already like an invalidation, but especially once price is going to enter the price area of this wave 1 at about 27.5k, this is a real invalidation for me for a wave 4. Now of course, if price is going to move to the downside and takes this low, this invalidation goes off the chart, but obviously I will update you about that. So in this scenario, this is then a 3-wave structure in a 4, after which we then expect continuation to the downside in a wave 5, where the most common target for wave 5 is the 1.236 to the 1.618, which is between 26.5k and 26.2k, taken from the low of 3 to the high of this wave 4. We also have the 1-to-1 over here, which is sitting right in the middle at 26.3k, which is taken from the high to the low of 1 to then the high of wave 4, and the 0.618 is also another target for 5, taken from the high of 1 to the low of 3 to then the high of this wave 4. So this is definitely an interesting area for potentially the end of that wave 5. Also in confluence with a target box that I have over here, which is sitting between 26.2k and 26.3k for some additional confluence in that particular area. Now what is important in this impulsive structure is the vertical line on the chart, which is a Fibonacci time. And this Fib time is taken from the beginning, or actually like this wave 1 over here, to wave 2, and then I put it on the wave 3. So what I'm doing is I'm comparing the time it took to develop wave 2 with the time of this potential wave 4. And preferably, a wave 4 is longer than a wave 2. It is quite rare that a wave 4 is shorter in time than a wave 2. So because now we are comparing wave 2 with wave 4, the 1-to-1 over here shows the exact length in time of this wave 2. So if wave 4 would have ended over here on the vertical line, then wave 2 and 4 are identical in time. But in this scenario, if this is a 3-wave in a 4, wave 4 now is longer in time compared to wave 2. And that is also what I prefer to see, because again, it is relatively rare to see a wave 4 that is shorter than a wave 2. However, there is always a however. If wave 2 is a longer, more complex structure, rule of alternation, you can Google this one. Rule of alternation is, well, don't Google it, stay here of course, is that basically if wave 2 is a deep correction and short, wave 4s tend to be more complex and sideways. If wave 2 is more sideways and not that deep, so quite like shallow, then wave 4s tend to be shorter and deep. Now, if this is over here already a wave 4, it only hit the 382, which I mean, it is a target for a wave 4, but maybe the 0.5 would have been better. But if we do push towards the upside, the other impulse might actually be preferred. And then, yeah, then this might have been the wave 4 that we've been looking for. So we have to wait and see what price is going to do over here. Because in the other impulsive structure, this is a 1, 2, then we have a 3, 4, 5. And now you can see that this wave 4 ended before the 1-to-1 line, which means that this wave 4 over here is then shorter. There are a couple of iterations. You might put this wave 3 over here and then have over here like a WXY in a wave 4, as I've shown in a previous video as well, which then means that if we do this, and I move the fib time to the right, wave 4 is longer again. So actually counting the end of this impulsive structure is quite complex because of all the overlap structures over here. But in the end, it actually doesn't really matter for a potential trading setup where this wave 5 is ending, because we are looking at a wave 5 anyway, preferably a 5-wave move. Doesn't matter if it ends further down over here or if this is the end, because if this is a 5-wave move to the downside, then eventually you expect a correction, but you always expect another 5-wave move to the downside, because a 5-wave structure cannot be a standalone structure. Like a 5-wave impulsive move always needs a connector, like it always needs another 5-wave move to the downside. So if this is already a finished structure in a 5, you then expect a corrective weekend coming up, and then eventually next week, or whenever, you expect another impulsive move towards the downside in then either an A, B, C, or a 1, 2, and then a bigger 3 towards the downside, right? So that's actually quite important. So of course, one can be looking for longs and whatnot, depending on your strategy and everything that you're looking for and your entry requirements and all that good stuff. But from an Elliott Wave point of view, if this is an impulsive structure to the downside, which it looks to be, then probably the most safest potential trading setup is yet to come, where if price is going to retrace, we still have a target box over here with some confluences that have not been touched over here. Could be quite interesting for then a potential short scenario to the downside, right? We are playing the probabilities and trying to put it in our favor. No financial advice, you need your own plan. And if this is true and we have a 5-3-5 scenario over here locally, then if this is potentially a 5, then a 3 and a 5, I'm looking at a potential expanding flat in a bigger wave W. So this W is then moving to the right side over here, where then the whole corrective structure from 31K is an ABC in a W, which is a zigzag. Then you have a corrective pattern in a wave X, which can be any corrective structure. And then I'm looking for a flat ABC in then a wave Y, which I think is very, very, very interesting. I would love this scenario where you then have a 5-wave over here, 3 waves, 5-wave. So that means you have a zigzag in a wave A, taking the double bottom potentially for liquidity, and then a push towards the upside in again a 3-wave structure for a wave B, where we have an interesting target area over here, including the golden pocket, and a target area from 28.9K to 29.2K for then an impulsive move towards the downside, where again, yeah, we have multiple like target areas over here. We have the yellow one and the blue one, but of course I'll talk about those in more detail once we get more of a structure towards the downside, if that of course is eventually gonna play out. Now, an alternative scenario, and I do want to show you at least, is the where is it in my chart? The micro zigzag over here. I spoke about this scenario in detail in my previous video, so I kind of recommend you to watch that one. But this scenario at the moment is an alternative, mainly because this wave C is incredibly long. It's incredibly extended. It's long in time, 3.5 times longer than wave A, and also extended all the way to the 1.618, which is a rare target for a wave C, but a common target for a wave 3, which then again is more of an impulsive scenario. So yeah, preferably if we look at this structure, I would like this honestly, and then eventually you move to the downside to go towards that target area for wave 5. I think this impulsive scenario looks a little bit cleaner, but of course, as mentioned, from the overall perspective of what we're looking for is that if this is an impulsive structure, eventually we want a retracement, and then another 5-wave move to the downside is what we would be looking for then a potential short scenario, right? So we have to wait and see what price is gonna do here, and if it is gonna find support right on top of this area, which I think is interesting. And if price is going to go up, take these highs, and especially enter the price action of wave 1, well, then wave 5 is already in, and we have to wait and see what price does. So I hope this video was helpful or valuable to you. Please check out the most recent educational update I've done about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.